Hi, welcome all of you. Ruchi,
Hi,
Nisha,
Raju.
Ekta,
Hi, hi Ekta, hi Ruchi.
we have no person Fabio is joining now. So, welcoming all of you for this interesting fireside chat. Mostly women panel, interesting going to be. So, all of us, family officers, direct investing into scaling tech startups, opportunities, challenges. We have the speakers, Ekta Tolani. She is from Kuwait. She is the executive director, Astrolabe Holding. She manages the investments for a single family office and have been into investments over a decade. She specializes in asset allocation, edtech, single family offices, VC, technology, investment strategies.
Oh, that's my introduction going on. Sorry, I
Yeah,
lost
yeah,
connection for a
introduction.
minute. I was like, who is this person just doing exactly the same work like me? Good.
we have
Okay.
Nisha Sachdeva. She is from Canada,
Hi,
managing
Nisha.
director.
Hi.
She is a Columbia Pacific Capital Partners. She has 30 years of work experience in various verticals of finance. Role is into involving raising capital, investor relations, work closely with the various teams to create digital lending products, advisors to startups in India and USA. Hi Fabio, welcome.
Hello, how are you?
Then we
Hi,
have
Fabio.
Bye to
There is
everybody.
some audio issue going on. Is it for everybody?
Yeah, it's going
yeah,
on
there is
for
some
me.
noise coming in.
Yeah.
One second, I think is it from my side? I know. I'll let me check it out.
I think it's from Fabio's side.
No, because
Yeah, now it's gone.
Yeah, it's gone now.
Fabio, you want to try speaking so we know?
He's on
Okay,
mute.
so next we have
now do you hear the background noise?
Yeah.
I think
Yeah.
it is from Fabio. I think right.
Okay, just one second because I'll
No
take
problem. No
out
problem.
the.
Yeah,
Oh,
it's
much
true.
better.
We have Ruchi Dana. She is a director investment Dana Group based out of Dubai. She has got a lot
Hi,
of
Ruchi.
credibility. She has worked with the Golden Seeds, a women focused angel network in New York, New Silk Route Growth Capital, and she worked for a PE firm in Dubai. She has also funded startups, Jugaad, and she is into she is also venture crowdfunding accelerator platform for Southeast Asia.
No
And
wonder
one
she has
big,
so many books behind her.
yeah, she has got a lot of activity. Then we have
Yeah.
Fabio Scacciavillani. He is from UAE, New York, partner EMINTAD, Golden Eagle Capital. He is a leading economic expert, asset manager with 30 years international experience in macroeconomic forecasting, financial strategy, industrial analysis. Then I think we have all, right? So
Thank
it's a
you so much.
fireside chat. So Fabio, you want to take the lead about the topic, then everyone will follow it up. Fabio, are we able to hear?
Oh, we cannot
Okay.
hear you, Fabio.
Your audio is not.
Okay. Meanwhile, a quick question. So I'm from family office. Ruchi is from private equity background,
Venture capital.
venture
Ruchi
capital
is
and
from
private
Dana. She
equity.
is from family. Yeah.
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 Okay, Ruchi, you start. In the meantime, Fabio will fix up things. Ruchi, you can start.
Okay.
How you go into direct investing, scaling tech startups. So everyone will take the lead based on that.
Fair
Sure,
enough.
sure. Yeah.
Yeah.
Thank you, Rajan, for inviting me, and I'm really excited to be here. So we are a family office based in Dubai, and we also have our own operational business. It's into manufacturing of steel and oil. But we are a family of doctors. So both of my parents are doctors. I'm a doctor. My brother is a doctor, and we do have a hospital and a nursing college back in India. So our main investments are into healthcare sector because that's what we understand best. even though our operational business is into steel and oil, but like those are sectors in which like not much tech disruption is happening. So we stuck to the healthcare sector because that's where our expertise lies. And the doctors in India actually helps us quite a lot in terms of the due diligence process and all. And we also rely on some expert networks if there's like a project that we need some specific due diligence on. And in terms of like sourcing deals, it's usually like through the network of associates or through conferences like these and our network of family offices and all that we get the deal flow. I also travel quite a lot to the US. So I personally studied medicine, and then after that, I also did my MBA from Stanford. And at Stanford, I also took the Stanford Biodesign course. So a lot of medical device innovation comes out of that course, and we are actively looking for that kind of deal flow because that's something that we understand the best. And once we get the deal flow, we do rely on again our network or referrals and all to do further due diligence on it, and then like also look for co-investment opportunities with other family offices. We're also LPs in a couple of micro VCs. So there again, our strategy is just to get like good co-investment opportunities so that we can double down on the winners. So that's our main exposure to the direct investments and like tech startup investments. It's mainly in the healthcare sector.
Beautiful. Thank you.
Thank you.
So shall we do a quick introduction like you started, Ruchi?
Yeah, I think so.
Okay, fine. I can go next. Hello, everyone. My name is Ekta Tolani. I run the family office for one of the largest shareholders for Alsair Group. This is called Astrolabe, which is a single family office. And obviously, one important part of the family offices is managing the portfolio. So I'm responsible for managing a huge portfolio for the diversification of various asset classes. And other aspect is the strategic investing in which we have a long-term vision, how we want to grow, where do we want to be seen, what do we want to be known for. So on that front, we are as a single family office or as investors, we are very passionate about tech. So we are active investors within tech. We've done a lot of investments through funds. And when it comes to direct investing, we have strategic angle with edtech and with gaming. EdTech, my background is in EdTech, and the CEO of a single family office, who is also the principal and owner, has a background in gaming. So we are trying to capitalize most of the bandwidth that we have in terms of human capital. Other than that, a quick background about the group, because that's very relevant here. Alsair Group is the largest conglomerate based out of Kuwait. We are the sole distributors for Toyota Lexus in this region in Kuwait. And we are huge into healthcare and education. We have schools, particularly focused on investments into K-12. We do have pre-K as well, but the main focus for investments is K-12. And we do have investments into healthcare. We have done investment into cancer therapy center based out of UAE. We have investments into medical supplies and pharmacy businesses and dental clinics. So that is the healthcare arm so far. So we're exploring investments into that too. We are huge into real estate, like all Arabs are. We are huge into food and beverages. We own the franchise for Karubu Coffee across GCC and Turkey. We own the franchise for Five Guys in Kuwait, and we are huge investors into banking and financial services as well. So it's like there's a huge conglomerate invested into a lot of things. So at Astro, so we already have investments through all the areas that I talked about through the group, which is the operating entity. But from Astro, we try to, one, not overlap with what group is already doing, and two, try to capitalize and see strategic angles. So at tech, we know that we have a strategic angle now that more and more edtech companies are coming up, and we do have schools if we want to like pilot, or if we want to scale, or if you want to like really run those kind of experiments. And when it comes to we have done some investments into fintech. However, we don't go too much into that, but that's an area. Health tech, we love doing that, and we have a strategic angle, but we don't understand that so much because there's nobody remotely doctor or have any medical background. So we try to not touch that. In terms of investments, yes, initial obviously strategy was to go through funds because that's easy. That allows us to partner. And as Ruchi also mentioned, we do look for co-investment opportunities. We have winners which we can easily spot. We now do direct investments as well, which are into gaming, mobile gaming particularly, and edtech. So far, the entire value chain of edtech, particularly focused on K-12 and upskilling. I am from India, born and brought up there. Spent quite a lot of my career there. Moved to Dubai, worked there with a startup, into edtech again, and I've been in Kuwait with the same family for 5 years. Joined as part of their investments team, and then was moved to the single family office to take care of the separate portfolio. I'm a Chicago Booth graduate, and I'm a public speaker and have done a lot of videos on Facebook on mindfulness. These are my areas of interest. Thank you. Who goes next?
I can go next. Sorry about that. So my dog just decided to kind of. So I'm based in Toronto. Just like Ekta, spent most of my formative years in India. Spent most of my career, formal career in India. Started with private banking with Citibank way back in 2005. Spent a couple of years there, and eventually also set up the Macquarie office, the wealth management practice for them. Those were the initial couple of years of my career, where I worked closely with some of the largest family offices based out of India. And those are the relationships I'm carrying till date. And moved on the other side of the table, got into investment banking. And my final formal stint was with GE Capital, where I was looking at their structured finance piece for north of India. And GE got acquired by Apollo Private Equity. So I was part of the entire transition, whereby, we reduced the book down to zero, decided to kind of really, have a new avatar, invest into, create a digital lending platform along with institutional lending platform. Did that for a couple of years before I finally moved here. I'm a U Waterloo graduate. My family's been here for the last many, many years. So I had to, at some point, move here. And this happened in 2019. And I think it was just, Canada was just waiting for me to kind of really start the lockdown. And I've mostly seen, Canada in a lockdown. Having said that, founded Columbia Pacific Capital Partners in August of 2020. The groundwork was happening because I was sure to be moving here. And we are a fund which is focused on tech and tech-enabled companies. It's a buyout fund whereby we do direct investments. We are backed by a large family office here. But having said that, we work with some very large investors and look at majority acquisitions in tech and tech-enabled businesses, primarily in North America. So the focus is US and Canada. We don't look anything outside of that. As we speak, we are also fundraising for, we're setting up a mobility-focused fund. The theme is mobility. We will be investing in anything that's pertaining to movement of goods or people, supply chain, logistics, the entire ecosystem. We have some commitments there. We have an anchor investor. We have a couple of commitments from some of the largest family offices. So that's happening. And as we are investing, but we're also fundraising simultaneously. That's pretty much what we're doing. So over to you, Fabio. We can't hear you. No.
Fabio, I think audio props still on. Why don't you refresh your audio issues are still there. Just refresh your screen, maybe.
I think Fabio is trying to reconnect.
Okay, in the meantime, let's start again. Go to Ruchi again. So how you're looking at the post-pandemic scenario investing? Which
Sure.
are the domains you're focusing on investing? Tech startups.
Sure. So, like as we saw in COVID-19 times, like almost everybody became an expert on like vaccines and everything. Like there were a lot of new healthcare investors that came across, and the valuations are so high. But there's some sectors that are really promising. So one of them is remote patient monitoring. So, like with the use of IoT devices, wearables, and all, you can actually gather a lot of data about the patients and then like work towards like management of chronic diseases and do it in a very strategic way. One of the ways to go about this was like outcome-based approach. So, a number of startups are working on outcome-based approach that actually helps the entire healthcare system as well, and it reduces the burden on the healthcare systems. So that's one aspect that's looking promising, even like in the post COVID, where it's like a platform technology that can be used for various stuff. One of the other things that's really required right now is cybersecurity, and cybersecurity in the healthcare sector is something again that a lot of people are now trying to focus on. In fact, there was a case of ransomware in the US in which like a hospital had to pay the ransom to get the data back. So that was a big surprise for everybody around the world. And there are a number of startups working on cybersecurity for healthcare, because as we go into remote patient monitoring, as we go into telehealth and all, everybody is at stake, and there's a need for a lot of awareness in cybersecurity as well. So I'm actually on the advisory board of the California State University cybersecurity program, and I'm providing them some inputs on the healthcare aspect of it. So cybersecurity again is here to stay, even in the post-COVID world. I think like everybody's become much more aware. There are so many more attacks for ransomware, and also it's here to stay. That looks promising. One of the other sectors is preventive healthcare. So like recently, I was on an all doctors panel, and all the doctors were saying that suddenly, like the patients are so much more adherent to the medications that we give, because everybody is worried about their health, about the comorbidities that become very dangerous in times of COVID-19. So people are really aware of their health. They're trying to take the necessary precautions and paying a lot of attention to preventive healthcare. And I think that would again be really helpful for the entire healthcare ecosystem. So preventive healthcare, and in terms of preventive healthcare, it could be like genetic testing, microbiome testing to like check like what are the diseases that a person is much more susceptible to, and take like preventive actions earlier on. And we made an investment into a genetic and microbiome testing company recently, and it's doing fairly well in times of the pandemic. And it's here to stay. And as we talk about preventive healthcare, there's also a lot of opportunities for precision medicine and personalized medicine. But one of the challenges that's still there for this is like it becomes really difficult and expensive to scale these technologies, because it's very expensive, and the cost of the treatment of such rare disorders becomes very huge. In fact, there's a good opportunity for the rare disease management in the Middle East, because the families marry within the families and all, and that causes a number of rare diseases. And but the thing is that in terms of manufacturing capabilities, the world is still not ready, and there are still not enough manufacturing capabilities for this. So in fact, we saw some capex heavy projects as well that are looking to make these manufacturing facilities, and one of them was in India. And I think that might be well, because as we see in the current geopolitical situation, I think India would emerge as a winner in terms of like the supply chain and the logistics of stuff. A lot of things were moving from China and Vietnam to India actually. So precision medicine and like personalized medicine could be having a lot of potential, but again, like it's up to the manufacturing capabilities and up to us to actually reduce the price further. And then there's always like a use of AI in various aspects of healthcare. AI for drug discovery, for drug repurposing, like using the same drugs for different diseases to find out biomarkers, high throughput screenings. I saw a number of startups working on high throughput screenings to come up with new drugs for existing diseases, and to come up with new targets for existing diseases as well. And then there's the use of AI for like hospital workflow automations, and in terms of like imaging. That imaging has been a use case for a long period of time in terms of radiology, pathology, in which like AI has a good work to do, and it releases a lot of burden from the healthcare workers and from the doctors as well. And then there's another aspect of robotic surgery that again like uses AI, and that's the next version of robots that are coming up. So they use AI and they help like junior doctors to do surgeries in a much more efficient way, and to reduce the time for hospital stays, to reduce the size of the wound, and to reduce overall the burden on the healthcare facility. So I think these are some of the sectors that we're actively looking at, and even in the post-COVID world, these would be promising. So we have made investments in almost all of these sectors, and we are actively looking at other opportunities in these sectors as well.
That's great. That's great. So, Ekta, what's your take? Pandemic post. Fabio, you are able to hear?
Now I hope to be able to speak
Great,
as
great.
well.
Beautiful.
Start.
Shall we first go ahead with Fabio's intro then?
Yeah.
So I'm an economist by training. I'm a PhD from the University of Chicago, PhD in economics. So I have something in common with Ekta, who is a graduate of the business school of the University of Chicago. And I started my career at the International Monetary Fund. Then I moved to the European Central Bank. And then from central banking, I moved to investment banking in Goldman Sachs in London, before changing completely my horizon and moving to the Gulf, to the Arabic Gulf, to work for a sovereign institution and international organizations in Qatar, in Dubai, and for 8 years in Oman as chief strategist of their sovereign investment fund. Over the past 2 years, I started working for an investment bank in New York, where I'm a partner, where I took a stake. And we have two main lines of business. One is the asset management. In particular, we have funds that are managed traditionally, but we have also what we call Industry 4.0 fund, which invests typically in innovative companies. The second line of business, which is somehow ancillary to this Industry 4.0, we adopt the European jargon in this area. But the other line of business I was saying is the fundraising for innovative companies, usually through listing on the over-the-counter market in New York or the Nasdaq Capital, the junior segment of Nasdaq. But we are able to conduct all sorts of operations. For example, we've invested in companies that do cloud storing for the film industry. We have invested in companies in fashion, which are adopting innovative production technologies. We've invested also in a lot of medtech companies. Usually, even we have helped to raise capital even in the testing phase. So before the company had a drug approved by the FDA. I'm also launching an impact investment fund, which will target innovative companies, mostly but not exclusively in Europe. So that's who I am and what I do. I can add that I've been quite active also in scaling up companies. I mean, I've assisted or examined dozens of companies from the pure seeding stage to the pre-IPO stage. So I've been quite active. I mean, I have been quite knowledgeable about the various problems that can be encountered by a startup in its process towards the IPO.
Beautiful. Thank you,
Okay,
Fabio.
Ekta, you take up
Yes.
your post-pandemic opportunities. What you're looking at, which are the domains?
Okay. So, of course, post pandemic, one thing definitely has happened is the world has moved towards digital economy, and lot of, in fact, big chunk of the world that was not really into smartphones or into digital world has also moved there. So one big change that has happened is we've seen huge numbers, or in terms of lot of companies within it, ed tech, within gaming or digital, anything, e-commerce has boomed. Those kind of businesses within tech itself, tech stocks also, you've seen everything is skyrocketing, and Dana was also mentioning the valuations. So, and because of COVID, healthcare has also boomed a lot. Valuations, you talk about schools, you talk about schools, particularly at tech I'm talking about, and healthcare. So there is a lot of opportunity, particularly in these areas. People were staying home and playing games, that went up. Schools were shut, at tech went up. uh, there were a lot of digital healthcare solutions that came into it, that went up too. So right now, even though I've been evaluating all of those opportunities quite a lot, fintech also went up. So we know that next big thing, or rather I wouldn't say next big thing, it has been tech. Over a period of time we've seen the growth in last decade already, but still there is lot of untapped market in terms of lots of technology startups or companies, I would say. And out of the world's total population, two-third of the population falls into the bracket of 15 and 64, right? That's the age group, and that is basically the action period, I would say. You talk about higher education, you talk about person's career, entire career life, you talk about corporate journey, everything. Everything falls into that. So anything that is consumption driven, anything that is growth driven sort of things are where I see a lot of opportunity. Particularly as part of the family office, we focus a lot on gaming and edtech, and within that, again, at the cost of repeating some part of it, we know that schools were shut. So um, parents and students and schools and teachers and the regulatory bodies, everybody needed a solution, and the solution was digital schools. Now that came into various forms. Some schools were ready for that, some were not. So the solutions wherein you could just pick something up and integrate kind of things worked out very well. And there are still lots and lots of schools that are still not up to that level. Lots of schools are still using Zoom, for example, still using Microsoft Teams. They still don't have the right platform to give students the real time school experience, right? So there is still a lot of opportunity to give better experience. If this year is also going to go into lockdown or quasi lockdown, then we are talking about another year. So this basically is also functioning as a new habit loop for the entire universe, be it students and be it us. Because I say that it takes 90 days to, for some, so is a certain period to form a habit, and in 90 days if you keep on doing same thing, it becomes your DNA. So digital has already become a DNA, and this is another year. So we are getting used to that world. So anything into tech, there is huge opportunity. And I'm a big fan of edtech any which ways. Anybody here who plays games would be able to talk more about it, but we've seen huge uptick into the companies that are into that, particularly mobile games. Children who didn't even have access to tablets or mobiles, I'm not saying they became rich and they got access, but parents who were not giving that kind of facilities to kids have to give now. That's the only way that they can learn, right? But I also see huge opportunities into developing countries, wherein the challenge still exists because schooling or infrastructure is still a challenge. And what are we talking about? EdTech. So any new technologies that could serve the masses and could bring the overall cost down, there is still huge opportunity for that market, because lot of world is still emerging, lot of world is still not as privileged, and we are talking about technology. So there is a lot of opportunity on that front as well. That is it. Yes, to Nisha.
So I agree. I think at the cost of sounding repetitive, some of the points have already been illustrated by both Ruchi and Ekta. We live in a world. I think the post-pandemic.
That's the benefit of going first.
I know, right? Yeah. So I think the whole digitization of businesses has certainly been accelerated, and I think a lot of inertia or was there in terms of adoption of technology. That's kind of being shunned away, because I think we were businesses were really forced to kind of really work remotely, and I think that's the new takeaway, that work can function smoothly sitting in a remote location. And if you see the touch points, I think every industry will be impacted. If you look at consumer behavior, of course, which has been massively digitized, I would say. So there is this whole shift in how the retail tech will emerge, in terms of shopping behaviors. If you look at the consumer sector, similarly, I think healthcare and particularly in terms of the digitization of softwares to work for workflow automation, for example. Anything that was required for enterprise health and safety management, automating workflows. There was a lot of resistance even from the SMEs, but I think what we have now seen is that even the smaller and mid-sized companies have now realized the importance and have started being more receptive of the idea. And suddenly you see that even for, which is good from an investing standpoint, right? Because when you're looking at younger companies which are let's say making something which is a software for automating workflows, or which is for enterprise health and safety management, suddenly the market size, the TAM, gets much, much bigger, because that inflection point of early movers, early adopters kind of suddenly has that crossing the chasm, suddenly becomes, I think, relatively easy. Nothing is easy at the end of the day. But I think we live in a world where we will see those behavioral shifts kind of really impacting practically every sector that's there. You look at oil and gas, manufacturing, healthcare, the whole access, probably in countries which are less developed, where access is a challenge. The whole digitization will kind of really thrust the whole opening of avenues for people to access education, people to access healthcare, or anything which is basic standards of living as well. So right now, I think the market opportunity will suddenly, obviously it will be much more larger than what it was. But it kind of really, then you have to look at the challenges around there, that, while we are saying that, there is tech adoption, but then the other challenges, for example, if you look at only emerging markets, is that how do you kind of really ensure that there is a seamless exchange, or digitization? Because having access to a mobile phone is one thing, but then there's this whole lack of infrastructure, which is like the internet connection's not there, the electricity connection's not there, which kind of really will percolate down to how the opportunity emerges in terms of monetization and commercialization. Having said that, I guess it is funny, because cybersecurity remains a very good area of interest to us, and we saw a company which was into cybersecurity. It was an MSSP business, which you would relate to it, and especially focused on hospitals and healthcare. So we completely loved the business. We went all out, and we put a term sheet, but the valuation expectations were simply haywire. So at the end of the day, it was an MSSP business, decent size, I would say, and the revenue, the multiple expectation was on the revenue and not on the EBITDA. So which is surprising, and I think that's the trend we are looking at right now, that even a lot of services companies, so to speak, given the whole thrust and the revenues ramp up that has happened, suddenly the valuations have become expensive. So now I think what we have to really take a step back and say that, okay, how much of this is sustainable, and how much money do you pay, to really acquire something which is a meaningful stake in the company. So maybe, Ruchi, your thoughts on that?
Yeah, I would completely agree with that, because especially in healthcare, we have seen crazy valuations.
Yeah.
But one of the other things that we have also seen are number of exits that have happened, especially in the healthcare sector, and a lot of them have been through the SPAC opportunities. So I think the figure per SPAC in healthcare for till February alone for this year, it was more than $20 billion. So that's a huge amount of exit that the healthcare sector is seeing. So, since I'm not an expert on SPAC, I would love to get your opinions on how do we evaluate such opportunities in which you can see some sort of potential for exit, but we haven't done any SPAC deal till now.
So it's interesting you say that, because we are right now in the process of taking on a mandate on the M&A side of our business to help a gaming company go for a SPAC.
Okay. Yeah. We should talk offline.
So it's certainly true that SPAC suddenly has really opened up the whole public market access. But if you also see the trend really ramped up, and it's now really getting into a little relatively saner mode, because it's a whole process altogether, and we can take that separately. It's a full 2-hour discussion.
It's a separate discussion, yeah. But Rajan, we gave some content. Rajan, we need one session on that too. SPAC.
I know.
Next month, for your information, we have SPAC focused webinar.
Whoa,
Not next month, this month, 31st we have. I already announced. I'll be announcing it tomorrow. All about SPAC deals in different sectors, even healthcare, medical. Everyone is launching into SPACs.
Yeah. Okay.
So now, Ruchi, I think we come to the third round of the pandemic challenges. Healthcare is opening up a lot of opportunities for investment.
Yeah.
So what are the challenges you face? New startups are coming in. They offer a lot of opportunities.
Sure.
Talk something on that. The challenges, you talk about the challenges of investing.
Yeah. So one of the challenges is definitely the valuation levels that we are looking at right now. That's huge. But apart from that, as I was mentioned, there are a lot of new entrants into the entire healthcare sector. So not just startups, but also investors. So one of the things that the healthcare sector has is you need a lot of patience in this sector. So I'll give you a short example about a startup that we invested into. And so there was a computer science graduate from Stanford who was part of the team. He was not the founder, but he was recruited as part of the team. He was a very smart guy, and the team had a lot of expectations from him. But the team sent him to the doctor's office to gather some data, get some input from the doctors and all. And the doctor asked him to wait in the waiting room for some time, and the waiting time happened to be around 2 hours, a little bit more than 2 hours. So this guy, this really smart and bright computer science graduate from Stanford, he just lost his patience. He said that I cannot just wait for a meeting to happen for more than 2 hours in this. So that's the amount of patience that you require, especially in the healthcare field, because the doctors are operating in the operation theater. They cannot just run out of the OT to address a meeting. And also these are some of the nuances that happen in the healthcare sector. So you need a lot of patience. And instead of the usual startup founders that are very, very pushy in healthcare, you need some people who are a little bit more patient, who can understand and empathize, not just with the doctors, but also with the patients, because it's a really, really sensitive issue to even talk about. So if you're talking about rare diseases and all of those things, you never know what sort of trigger points you trigger when you're talking to a patient or a doctor. So it's important to have some sort of empathy. So it's not just professional investors that can just enter the healthcare sector. It's a lot about understanding the industry and then getting into it. So recently, with the SPAC exits, we also saw a number of investors who were not into healthcare, who just entered into healthcare, like Tiger Global, and a lot of more investors who just happened to enter the healthcare sector. So I think that would again be a challenge, because as we see in the near future, there might be these investors might push the companies to work towards the returns and all of those things. But healthcare is a sector in which it requires sometimes a lot more patient capital. So that's something that people have to consider when you're looking at the healthcare sector. So those are the two key challenges that I've seen, like having the right attitude for the team and the investors, and also like looking at the valuations. That's something like it's a little bit challenging, but these are things that people can work out on.
Yeah, family offices always they give patient capital. They think of it as a patient capital.
Yeah, yeah.
Your take on the challenges of investing?
Did you say something to me?
Yeah. So I want to know what is the
Okay.
challenges you foresee, in investing in this current situation, pandemic challenges.
Very interesting. So I've been like evaluating lots and lots of opportunities, particularly within edtech, and I'll narrow down my conversation to that because that's my area. So we see a lot of repetitive opportunities. I see similar opportunities. Now everybody knows this is booming. Everybody knows this is like schools are still not functioning. This is here, and now new kids have got into the business. So these are all basically the data points and the customers, right? So one is that I get to hear about similar type of products from all across the globe, Southeast Asia, India, US. Similar type people are replicating quite a lot. So and at different stages with small tweak, but more or less similar. But what one thing that I do not see is everybody is addressing the technology part here, and I feel that there will be a time that we will be all quasi robots. And then we need to add some technology to bring human element in. So I really like the products within edtech also that sort of keeps the human element intact as well. Now these kids are growing, they're learning with they're growing with some values or certain mechanisms or traits or techniques, but I still feel that most of the companies that I evaluate, they're like really focused on the technology part but less on the human intervention, less on the communication. Like child is sitting and reading and studying fine, but where is the communication happening? It's like closed door, right? So the thing that makes the child also interactive, maybe with teachers, maybe with parents, and that kind of interactive environment, I feel that's the opportunity. We don't see those kind of products quite a lot. They are coming up, but many are focused on like, based on the individual learnings. It could be adaptive, yes, but end of the day, it's still individual learning. So yes, so human element is what I'm looking for, and that excites me because I think that is the next thing too. Is again, we are talking a lot about technology, but as we all know, Nisha also mentioned that large part of the world is not the privileged one. Large part of the world doesn't have that kind of infrastructure, digital infrastructure to support this kind of learnings. So wherever schools are shut, there's no education happening. So we still know that basic infrastructure, plus if you're talking about education, which is a $7 trillion economy, but very minimal amount has still gone into the technology aspect of that, edtech aspect of that. So to bring that to those rural parts of the world, there has to go huge amounts into infrastructure, digital infrastructure as well. So that goes hand in hand. But um, again, the opportunities that could bring the overall cost down and shows the promise of economies of scale are the ones that come across as very promising to me because they really address a problem which is massive. This is what I think.
Okay, Nisha, your take on
So,
the pandemic challenges?
the pandemic challenges, again, I am going last, so I have to, I am sounding perhaps a little repetitive. But,
No, you're good.
no, so I guess, suddenly what you've seen that, a lot of family offices, the mature family offices still have been at it for some time and are, more well equipped and, have a very professional approach of scouting investments and, operating a due diligence on that. So largely, I think my interaction with some of the family offices that I deal with is that there still is a certain operational experience they have from their line of business, which doesn't necessarily translate into, the kind of team. If let's say, if for example, Ruchi specializes in healthcare and they're looking at healthcare, but were you to diversify into something else, then how do you kind of really navigate those challenges, and what are the kind of then the best approach is to kind of really rely on professional, managers to kind of really scout those opportunities for you, because I think and in the post-pandemic world, I think a lot of family offices that are flush with money are more enthusiastic to participate in these opportunities. Now, I think Rajan, you mentioned initially that there is more dry powder available for investing, and most of the largest funds are oversubscribed. The Sequoias of the world run into billions of dollars now. So typically, their ticket sizes have really gone way up, and what happens is that there is still this whole layer which is flush with very lucrative opportunities as such, and how do you kind of really sift through that noise? I think that's a major challenge for family offices, to my mind, at least from my interactions with them. How do you kind of really have a more curated deal flow and really have a due diligence that kind of speaks to the business rather than just an idea on the back of the envelope? I think that's a major challenge which I see that, and we're talking in terms of family offices, hence that. But as an investor, whereby we raise money from family offices, I guess this is a constant communication with some of the family offices that we are dealing with in terms of really helping them understand that, while you are good at what you do, but if you are diversifying and it's not something which is, in your alley in terms of your day-to-day operations, this is something which will require a different approach of mind, and you should be open to it. And the other thing, I guess, and I think you guys briefly touched upon it, is that in a post-pandemic world, now suddenly when the inefficiencies of, the whole supply chain logistics, preparation across the globe, dependency on China for a lot of manufacturing and supply chain disturbances that have been caused because of the pandemic, this has kind of really exposed the world of the vulnerabilities and also kind of really cited where the opportunities lie. And I think that's an area where a lot of money will actually go into. So while there is noise and there are these short-term ideas that are coming in, I think a lot of we're seeing a lot of good ideas that are actually really trying to address these gaps, and those are the ones that we want to kind of really see if we can get into them early and see if we can have a multi-bagger in our pocket.
I completely agree. I want to add the valuation front, even in tech, even in gaming, we see crazy amounts. So there has been a shift in terms of valuations. Earlier, for example, a $10 million kind of company EV, if you're talking about the valuation of the company, that would be either Series A or Series B. Now that has come to seed. We are talking 10 million seed level. And I was like, if this is seed, what the hell are we talking about? And then something below that becomes pre-seed. There was a pre-seed concept earlier. I know angel investing. And then angel investing earlier used to be a couple of thousands. Now it's a couple of hundred of thousands. You see? So the huge bubble overall.
No, to add to that, we are looking at an opportunity on the mobility fund that we are creating. And there is this company we are exploring and we're talking to them. And they are roughly doing about 5 million in revenue right now. They haven't done a Series A, and in the mobility fund, we are looking at a Series A to Series B kind of ticket size. But as we speak, of course, the revenue ramp up is massive, of whatever the projections are, of course. And they're already kind of talking and engaging with the banker for a SPAC. So
Wow.
sometimes you have to kind of really ask yourself, is it, are you jumping the gun really? Because it's SPAC.
That's in
right
trend.
now,
Jumping the gun is in trend.
At the end of the day, you have to. The proof of the pudding lies in eating. At the end of the day, if it's not a positive cash flow business, I'm very old school still in my mind. There can be a substantial investment that's required, but 5 years down the line or 10 years down the line, I want to see a fatty chunk of money lying there in my bottom line. And I think that is probably my largest disconnect when I talk to founders.
I would say be a visionary. Only I would envision someday. Oh God, I know.
Okay. So the time is up. So let's summarize with one-liner. Start with Ruchi. So what is in hold with you in the future? What is in hold for the future?
So I think like the future for healthcare looks promising, and suddenly like the world's entire resources are getting pumped into the healthcare sector. So we'll definitely see a lot of interesting things come out in terms of like the tech and solutions for the current healthcare crisis that's going on. And these could be like platform technologies that could have uses for like the long term for various other diseases as well. So it looks promising.
What about you, Ekta?
Beautiful. I would say the knowledge or the learning is on our fingertips today, thanks to technology. So while we are benefiting from that, let's not lose touch with the human aspects. And from the investment point, yes, there is a flood of opportunities within this segment. It becomes all the more to do conduct a proper due diligence, even if the opportunity is small. So proper DD is important. Not just go with the flow of yes, this is the trend and just put money. No.
What about you, Nisha?
No, I absolutely agree. I think in this new normal, which will be the post-pandemic new normal, there will be definitely a whole, new set of opportunities with a fresh take on things, and and there'll be a lot of money. There's still a lot of money, which is, good money is always chasing ideas, good ideas, and there is no dearth of money. But this whole pandemic has obviously accelerated the whole digitized economy push. So we will see a lot of investments actually going into whatever kind of really makes any business product or service more scalable, more sustainable, and more accessible through the use of technology. So that's my take. That yes, this is here to stay.
Thank you. I think we have two questions have come up. Are you
Sure.
interested in co-invest in hospitals? Who is into hospitals investment?
Ruchi.
I think that will be for Ruchi.
Yeah, so we do have a healthcare, like we do have a hospital and nursing college in India, but like we are not involved in day-to-day operations. We have just given it to a group of doctors to run it. It carries our name. We get like a revenue and a profit share. But like happy to explore if there's a distressed opportunity in a hospital. Happy to explore that because our family business has grown substantially because of distressed opportunities. Like in the 2008-9 crisis, we bought a number of assets, and similarly last year we bought a number of assets. So I think like if there's a good opportunity, definitely would love to explore.
There is one more question. What is the fine line between KYC, public DD, and agree to a deal for the first time? What is that? I mean, I'm not getting.
I may try, though the question is not very clear, but I assume that you are talking that if you're doing the investment, direct investment for the first time, I would say if you're doing it for the first time, try to wait for the lead investor if that's possible in your case, because lead investor would usually go into full due diligence that includes commercial, financial, legal, and would basically cover and finalize the key terms. And as an investor, you could just rely on their DD. But if that's first time, I wouldn't recommend you to just go all in. And if that's new for you, but other than that, legal DD is what I give a lot of importance to. Sometimes it's very easy to understand business, and if it is coming through your known circle, then you know the people. But legal DD is very important. Not only the source, where the flow of funds is going to be, but how it's going to be utilized as well is very important. KYC you're referring to, basically KYC we see in terms of on the fund administration front when we are agreeing to invest. Yes, of course that happens. But if it is direct deal, then your own DD plays a big role. So that's how I started as well, and yeah, that's easy way.
Fine, great.
That happens.
Good insights on the startups funding scenario. Thanks for all of you sharing your time here to come here. Thanks, Ruchi, Nisha, Ekta. So look
Thank you,
forward again.
Rajan, for
31st
organizing.
SPAC deals. I'll be inviting you all. Thank you.
Thank you.
Thank
Thank you.
you, ladies. I would love to connect with you
Absolutely.
individually as
Yeah,
well.
yeah, I would love to. Thank you.
Fair enough. I'll write to you. Bye bye. Bye, Rajan.
Bye.
Bye. See you.
Bye.